It's they guide it very conservatively, and it's solid growth, and it doesn't include much of a semiconductor recovery. And last year, their semi business was the lowest it's ever been as a share of their total business. They've been diversifying in the semi down cycle in the medical device testing, electronic medical device testing, and more into aerospace, more into industrial. So they into food and chemical processing. So they have, you know, a very broad business today, much more diversified than it was. That's where the growth is in the backlog. When the semi business recovers, they're going to have a double barrel effect. So instead of growing 10 or 15%, I believe they'll have a spurt in the next year or two where they grow 20% plus for a year or two. And then it'll get valued as a growth stock, and then they'll be making, $1.50, which they peaked last cycle, $1.30 run rate for 2 quarters. So if they make $1.50 and you get a 20 or 25 PE, and you have a $30 stock, it's not. I'm not in this for 50 or 100%. I don't shoot for a stock that can only double. It's a higher risk, higher reward strategy for sure. But in this one, if they make their $2 in 3 years, like they're targeting, I would expect the stock clearly to be, closer to 30 than the 10 at that point.
Right. Good.